Alright, let's start with where PI stands right now. We're trading just above the 20-cent psychological threshold, and if you've been in crypto for any length of time, you know psychological levels matter. They're where emotions run high, where retail makes decisions, and where institutional players often set their trap. But here's where it gets interesting. On the 4-hour time frame, PI isn't just randomly floating around this level. It's trapped inside a descending triangle formation that's been building for 3 weeks. Now, for those newer to technical analysis, a descending triangle is one of those patterns that makes traders sit up and pay attention because it typically resolves with a strong directional move. Picture this. PI has been testing the 19.19 cent support level repeatedly since October 11th. That's your baseline, your floor. Meanwhile, there's a downward sloping resistance line pressing down from above, squeezing the price into a tighter and tighter range. We're now approaching the apex of this triangle, which is trader speak for something's about to break, and break hard. The fascinating part? Every time PI touched that 19.19 cent support, it bounced with long-tailed candles. Those long tails aren't random. They represent aggressive buying whenever PI dips to that level. Someone, or multiple someones, are defending that price point like it's the Alamo. Now here's where this story takes a turn, and why I'm making this video right now instead of next week. The on-chain data is revealing something that contradicts what you'd expect from a descending triangle. According to PiScan data, centralized exchange wallets just recorded an outflow of over 1.32 million PI tokens in the past 24 hours. Let me break down why this matters. When tokens flow out of exchanges, it typically means holders are moving them to personal wallets. They're taking PI off the market, reducing available supply. This isn't speculation, this is quantifiable blockchain movement. In traditional supply and demand economics, reduced supply with maintained or increased demand equals upward price pressure. The fact that we're seeing this massive outflow while PI holds the 20-cent level, not dumping, suggests accumulation phase behavior. Smart money doesn't usually announce their accumulation. They do it quietly while retail is distracted or fearful. But wait, there's more. And this is the part that really caught my attention. The Pi network ecosystem recorded 2 separate payment transactions yesterday, each for exactly 999,999 PI tokens. That's $200,000 worth of PI per transaction. Now these aren't exchange transactions, these are ecosystem payments, which indicates actual utility and adoption within the Pi network itself. Hold on. Before we dive into what this could mean for price targets, do me a favor. If you're finding value in this breakdown, smash that like button right now. It genuinely helps this channel reach more people who need real analysis instead of hype. And if you're not subscribed yet, hit that subscribe button and turn on notifications because technical setups like this don't come around every day, and when they resolve, you want to be among the first to know. Alright, let's continue. Let's talk numbers. If PI breaks upward from this triangle, and the on-chain data suggests that's the higher probability scenario, where does it go? The first meaningful resistance sits at the center pivot point of 20 cents, 0.2086. A decisive close above this level would confirm the triangle breakout and signal renewed bullish momentum. But that's just the first checkpoint. The real target lies at the R1 pivot point at 22 cents and 49/10 of a cent. That represents roughly a 12% move from current levels, not life-changing on its own, but remember, we're talking about a breakout from a 3-week consolidation pattern. These moves tend to have follow-through, especially when backed by the kind of on-chain accumulation we're seeing. Now, I'd be doing you a disservice if I only painted the bullish picture. Let's talk about the bear scenario because, honestly, risk management is how you survive in this market. If PI fails to hold the 19 cents and 19/10 of a cent support, if we get a decisive close below that level, the triangle breaks downward instead. In that scenario, we're looking at a potential drop to 17 cents and 32/10 of a cent, which aligns with the S2 pivot point. That's a roughly 15% downside from current levels. The key word there is decisive. A quick wick below support followed by immediate recovery doesn't count. We really need to see a 4-hour candle close firmly below 0.1919 to confirm the bearish breakout. Now let's quickly touch on what the momentum indicators are telling us because this is where things get nuanced. The MACD, moving average convergence divergence for the newcomers, is currently extending sideways below the zero line with a declining tilt. In plain English, this suggests lingering bearish pressure and sell-side inclination. However, the RSI, Relative Strength Index, is reading 41 and climbing toward the 50 midpoint. This indicates buying pressure is starting to build. We're not in oversold territory, which means there's room for upward movement without immediately hitting overbought resistance. Here's the thing about these conflicting signals. They reflect the uncertainty that creates the triangle pattern in the first place. The market is genuinely undecided right now, But when you layer in the on-chain accumulation data, that 1.32 million PI outflow from exchanges, the scales tip toward the bulls. Let's zoom out for a moment and talk about Pi Network's unique position in the market. The majority of PI's available supply remains off-exchange because Pi Network maintains stringent know-your-business requirements as part of their listing process. This creates a supply dynamic that's, different from most tokens. So, when you combine limited exchange supply with increasing outflows and rising ecosystem payments, you're basically looking at a supply squeeze scenario. Basic economics tells us what happens next if demand continues or even increases. And those two 999,999 PI payments I mentioned earlier, well, they're not just large numbers, they actually represent real ecosystem activity. Real payments mean real adoption. And adoption is the fundamental driver that all technical analysis ultimately depends on. Without underlying utility, technical patterns are just lines on a chart. With increasing utility, those patterns become predictive tools for genuine value movement. So here's the bottom line. Pi Network is sitting at a critical juncture. The technical setup is a coiled spring. The on-chain data suggests accumulation. The ecosystem shows growing utility. The next 72 hours could determine PI's trajectory for the next several weeks. If you're already holding PI, that $0.1919 level is your line in the sand. If you're looking to enter, watch for a confirmed breakout above $0.2086 with volume. And if you're on the sidelines, at least have this on your watch list because, honestly, moves from triangle apexes tend to be fast and significant. Before you go, make sure you've hit that like button if this analysis helped you see PI's current situation more clearly. Subscribe to TJ Crypto World if you want more breakdowns like this, where we combine technical analysis with on-chain data for the complete picture. And, turn on those notifications so you don't miss the follow-up when this triangle breaks. And hey, while you're here, check out my recent video on market-wide accumulation patterns. It'll give you some context for why moves like this PI setup actually matter in the broader crypto landscape. The link is in the cards above and in the description below. Thanks for watching, fam. Stay sharp, manage your risk, and I'll catch you in the next one. This is TJ, signing off from TJ Crypto World. Peace.